Following up on the central bank digital currencies, let us see how we can materialize such currencies. Pavel Kravchenko from Distributed Lab presents how to make it functioning and running for central banks.
My name is Dr. Pavel Kravchenko. I am the CEO of Distributed Lab. And today I will be discussing the technical aspects of central bank currencies. So quickly about myself, my background is that I have a PhD in cryptography. I've been doing development and information security research basically all my life. I was a manager in different companies, and in 2013 I went to Silicon Valley and eventually I joined Stellar, which is quite famous in the blockchain space. After that, I was doing some job in Singapore and Germany, and eventually co-founded Distributed Lab. We are the research and development center that dedicated for blockchain and decentralized technologies. And we work across the globe, more than 15 countries, implementing projects and doing quite a lot of stuff. So our mission is to build financial internet. That's the situation when all accounting systems will be able to talk to each other using like the same language. It's like HTTP or email for money, let's say. And CBDC is actually one piece of that, because you need to have money that is absolutely stable, that have like absolute trust for people. And this money should be accessible by regular citizens. During years of our time, we have done a lot of research. We basically published already 5 books. 3 of them are, as you can see them, they're here. And these books are officially textbooks in Ukraine. We give it to students, they taught, etc. I can show you one. Yeah. And this is like a short story of ours. So we involved in many projects that require understanding of digitization, of cryptography, and decentralization. So the CBDC, it is a very hot topic now. It's hot because it kind of redefines the whole financial infrastructure of a country. So if you look at Bitcoin, we see that it is very effective in terms of like how people can pay each other without having any centralized entity and without the need of security administrators and firewalls and different aspects of infrastructure. It's very costly. And from the other side, we see the demand for the like inflation-free or maybe like risk-free assets that cannot be like just cannot disappear. And since actually the beginning of the world's history, people actually used CBDCs. Like all money were printed by government and used by citizens. And now technically you have, if you have cash at home and you want to make it, you want to transact digitally, you have to go to the bank, deposit that cash, see numbers on your account and pay. But the only one bad thing can happen. If the bank goes bust, then your money is gone. And this kind of strange because you had this physical cash and everything was fine. And as soon as you make it digital, it has certain risk associated with that. And this reason and many other reasons, they stimulated demand for CBDCs because technically the central bank of the country cannot default on on their currency, and it cannot disappear. It's already digital. So people would love to have an instrument that is absolutely guaranteed by central bank, and there is no commercial risk of some bank. So effectively, CBDC needs to establish a uniform infrastructure for payments within the whole country, but without this risk of the bank that can go bust. technically it's a digital cash. So you treat it like cash, but it can have many interesting features, such as programmability. You can program this cash to behave in different ways. Like you can do traceable payments, you can do special business logic for like welfare payments and procurements. So you can actually trace that the money being spent by the government are not like washed, not dirty money. So we can actually do a lot of things with the digital cash or like CBDC. And this stimulates demand from the central bank side. And as everybody knows, there are already many central banks across the world who have done certain studies and POCs, and particularly we participated in the POC in Ukraine. So goals are quite interesting. Obviously, there are many market participants who would prevent CBDC from appearing. And this is a good like thought experiment, because if we ask our children about how perfect currency would work, they have only one example in front of their eyes. These are like just normal games, online games. And every game has certain currency inside it. It's like gold or whatever. And who is issuing this currency? Basically, it's the game creator who established rules and said like, oh, this currency will be given to this player and to that player for this particular achievement. And there are no banks in any game. There are no payment systems, no payment initiation system providers, no transfer remittance companies. You just initiate transfer between two accounts. So effectively, CBDC is like one game for one particular like country, where everything was issued by the central bank, and all citizens just transact between themselves, and each transaction immediately reflected in the ledger of central bank. So it's very simple, no intermediaries by default, etc., etc. So for now, everything looks simple. Obviously, there are many like interesting requirements, and these requirements make system much more complicated. So first of all is obviously it should be secure, like cryptographically secure. You cannot have a risk of just backdoors for other countries or for hackers, etc. Then it should be auditable. So if somebody, usually it's another branch of power in the country, wants to audit all the transactions, I mean, at least the fact that currency is not issued to some strange accounts and money is not spent in certain bad way, then they should maintain the verifiable audit. And this audit should also be cryptographically secure, yeah, and with all the precautions. So currently with paper, it's really hard to conduct such an audit, and even if it's conducted, it's hard to believe in it if you don't trust the organization who have done the audit. With cryptographically secure functions, it is easy, more or less easy, and doable in a real time. Then the system has to be scalable. It should provide interfaces to all the market participants, including point of sales, including some insurance companies and many other participants. It should provide private transactions as well, with the verification of compliance. You cannot make it on a public blockchain, because then you have a lot of issues with competition when everybody will be able to trace what their competitors are doing. So you should maintain the right balance between privacy and compliance. And as I already said, the programmability function has to be maintained. Obviously, there is a question what to do with existing banks, and we will try to answer these questions later on. So why do we actually need blockchain for CBDC? The short answer is that technically we can build CBDC without blockchain. So if we try to explain the idea of CBDC to any developer or financial guy, then they'll say, okay, it's just a central database where everybody has its own account and can move money between these accounts. So technically CBDC is just one bank in the country where everyone opened an account. So technically you can do CBDC without any blockchain or even without building, a system for central bank. You can just appoint one bank and say, just, hey, everybody open account in the bank and use it as an official means of payment, and you cannot withdraw it. Whatever is on your balance is your balance. It's just the reason why we need CBDC is that currently we have many forms of money, like paper money, electronic money, then like bank accounts, and they're all technically different. They work in a different way. So if you just say this system represents CBDC, then a lot of problems will be eliminated. But it's not an easy path. So, but blockchain is very helpful in such system because, first of all, it provides with digital identity and digital signatures. And without that, you cannot guarantee the correctness of balances. So currently, if you look at your mobile bank and see certain number, and next day, while you didn't spend anything, you see again and see another number, you can call to the bank and say, I saw that number yesterday, but there is no proof. Even if you do screenshot, it's not a proof, it's very easy to fake. So technically, you as a consumer don't have any protection method from the issues in a digital sphere. And the only way to fix these issues are digital identity and digital signature. Then it would be as if you have the printed receipt after each transaction, each balance check, and this receipt will have a signature of the banker. So if you have any quarrels, conflicts, then you can present these receipts. But obviously with paper, it's very hard to conduct. You cannot search through paper. You can destroy it easily, etc. But with digital, it's much easier. That's why, again, we need digital identity, digital signatures. Then blockchain helps to maintain integrity control of history of transactions. That means that you cannot, or anybody cannot, delete past transactions or alter them. With paper, it is also a little bit hard, but again, you cannot search or do easy audit with paper. With existing digital technology, it's easy to modify data in the past and remove all traces. This is the main issue, that the problem with integrity control. So with blockchain, you can actually maintain integrity control while keeping privacy and confidentiality. So the last thing why blockchain helps is that you can actually do again transparent audit of all transactions. And this transparent audit technically is available for everybody. So this is a very nice feature. This is why blockchain is used in voting schemes, because during voting, you have to provide trust to the voters that their votes will counted correctly. So the same story here, effectively. All decisions associated with country politics, subject to fraud sometimes or quarrels and political conflicts. So the less you have to argue about, the better. So one of the most interesting questions that is asked, that's debated, is like whether do we have account or token model in the system. And I believe this question is wrong by design, because from a technical perspective, they are the same, except that for the account, the identity is attached, and token, it's kind of a bearer instrument. It's whoever has the token had the right to the money. For the account, it's always attached to identity, but it's not a technical question. It's just, for the developer, just one flag. So it's rather a question to the regulators. Do they want to have a fully transparent model, or do they want to have a model where money is anonymized? But definitely not the technicians. So yeah, don't ask developers what is better, because you may found a tokenomic expert who will tell you complete nonsense. Just first of all, the country politics needs to be decided. So there are a few actually ways of implementing CBDC. For the user, the result is almost the same, but from a perspective of politics and economic policy, it's completely different. The first is as digital cash. In that case, it would be that it's anonymized, these tokens, and yeah, it's a bearer instrument technically. The second one is like collateralized e-money. It's where the actually certain money is deposited to the account, and then the same amount is issued in electronic form. Then you can have the account-based system, fully like, yeah, not anonymous, and yeah, like a normal bank. And you can have identity management systems attached to it. Yeah, to any kind of system. As soon as you attach identity management system, then yeah, it becomes much easier to trace everything. So one of the possible CBDC infrastructures that accommodates the need of banks, because this is a very political question, what is the role of a bank, of a commercial bank in such system? And technically, if you consider example with the game, you don't need the bank in the system, because they would just keep balances, and that's, again, it's done by a central bank. And currently banks are doing the role of money emission through lending, and they also do like loans and deposits. And for the user, it doesn't really matter how it's organized, but for the government, it matters. So if you can build a two-tier infrastructure where a central bank is issuing money and it's sent to account of commercial banks, and then commercial banks distribute that money to people, then it would work actually fine. You just need to ensure that between banks, the payments work correctly. But if the money is uniform and don't have any difference, so it's like with stocks. When Bank A keeps the stock of company A, then if the stock is transferred to Bank B, it's the same stock. So currently with money, it's not the same because it accommodates the risk of a bank. But if you separate the risk of the accounting of the money from the risk of the particular bank, then it becomes much more simpler. And then whatever bank that will provide the better infrastructure for users would win more users. And whoever, like we see many banks that don't have good infrastructure, that it's very outdated, the internet banking is bad, wallets are bad. So again, in the CBDC system, in reality, the banks that have better infrastructure, better services, better customer support will win. So the role of commercial bank would be just custody of user assets. In that case, it means that actually, like, some physical assets are deposited, like gold or other whatever commodities, or, and it's not exclusive, and the role of commercial bank could be the custody of user keys. That's what we see in European Union and in the US. US just recently issued a regulation that allows commercial banks to record, to keep reserves for stablecoins. And Germany issued a regulation that allows banks to become custodian of user assets, like crypto assets, including Bitcoin, and not only. So the banks are good organizations to keep custody of user keys because they are trusted already and they have the branches, etc. So for example, how it could work, that for the very small transactions, like less $100, you don't need a second check. User just initiates the transfer from the mobile application and transfer is performed. Then if you have bigger transfers, $1,000, for example, more than 100, less than 1,000, then you need two-factor. To SMS is sent by the bank or something like that. And yeah, transfer is co-signed, the second signature on the transaction. Then for bigger amounts, you need a voice call, for example. So somebody is checking that it's you who are initiating the transfer. And if you need an additional layer of security for very high transfers, and you need to check, they need to check that you are not held in hostage, you do in-person visit and initiate the transfer in the bank branch. So in that case, you can combine security and usability because again, it's very hard to make system usable if you all the time need to have a voice call or visit something. So in this model, you can include commercial banks in the model, and they have good roles, except for the investment, like they do now. Can you do it without blockchain? Yes, it's just harder, but if you do everything okay, then you will anyway build the blockchain. So that's kind of funny. Yeah. That's my piece of my opinion about what we should not do. And I can explain why. And first of all, is that you cannot run the CBDC on a public permissionless blockchain for a few simple reasons. First, it won't be scalable. Second, is that you don't control the infrastructure. If it's attacked or DDoSed or some forks issues, you don't control the community, then you cannot control the infrastructure as a country. And the second is that every public permissionless blockchain has its own native token. And they stimulate, like every transaction that's performed on this public permissionless blockchain consumes this native token and therefore pushes the price of it up. And therefore many projects, they scream for central bank support because they know if some country will switch to their blockchain, their token will skyrocket. And this is like a purely political game. It's not a technological game or something like that. And I don't like that much. The infrastructure for the CBDC should be fully under central bank control. It could be completely auditable. So there is no question that they cook books. It won't happen, but it should be fully in their control. Then I would forget about interoperability for next 5 years because this question will arise after something is built. And the only thing we should care about is that compatible key management and compatible cryptography, or even like inclusion of couple of cryptographic libraries. And that would be enough for any interoperability. You don't need to send tokens between blockchains. I think it's a silly thing. Yeah, and you should not think it's about this cryptocurrency. It's not a cryptocurrency. It just digitized whatever currency. It's by nature, it's doesn't change. It's the same. It just central bank issues it. So central bank has the reserves, and these reserves are not physical. It's not like with stable coin that you need to maintain the 1-by-1 ratio. Central bank issues currency, and they are guided by the policy, monetary policy. So this simplifies a lot. So the CBDC is not as hard as people used to think. The only hard thing is what to do with commercial banks. And as soon as people find the way how to make them needed, then everything else is okay. So basically, the first step is just create requirements for APIs. These APIs could be public. Yeah, they have to be public. Implementations maybe not. But these APIs will let businesses kind of adopt for the future changes. And it's like implementing a payment system. So nothing complicated. And that will drive everything else. That was it for the technical side. Yeah, would be happy to later answer all the questions and share experience, share our books. Yeah. Thank you.